Hi there. Welcome to the closing bell on the 5th of October. Actually recording it on the Thursday afternoon. I've got the Friday off. And well, I hope I've got your attention. If you've been watching these videos, the last few weeks have been banging the drum pretty loudly, saying that things could continue to sell off and volatility could pick up. So really, the way it's looking, I was following this through once it started turning down, and this is, I think it was around here. It was actually higher when I did one a couple of weeks ago. It was around here, saying watch out if it starts to sell off through here, and we've had quite a sharp fall, haven't we? So I just want to set out the lines in the sand, what we're going to see from here. This is the S&P 500. It's a daily chart. And now that we have the sellers showing their hand in a bit of a bigger way, we can really create some clear sort of areas and lines in the sand where I can change a view and where I can say, watch out. Things could really get a bit explosive. We know the rates really rising fast over in the US, those 10 years. And look, what happens is, something can break and then all of a sudden the rates can drop rapidly. So we can be going into quite a volatile period. We could see sharp falls and then a reversal and sharp rallies just as quickly. So it's that sort of environment we might be going into. So just wanted to set things out for you now that we've seen what we've seen over this last period. And just the recap, always do the recap if people are new. Probably not that many of you new, but for the old hands, I'm sure you understand all of this, but I've got to explain it, haven't I? We've got the correction over the last year in the S&P. So that's a whole sell-off last year. And then we've had a rally, which has gone on for nearly a year. And I've been saying recently, look, this sell zone, this area, which is a 75 to 87.5% retracement of this whole correction, is an area where I'm interested in seeing whether a reversal will occur. So a reversal, which can then head back to the point of control, which is the midpoint of the wave. So that's sort of the process that we're seeing unfold at the moment. And you'll see in the past, just to prove things, I've got that wave there. You can see the point of control, that midpoint is like a gravitational point. That's where a lot of the trading's done, people getting sucked in and out of trades over and over. And you can see also the buy zone there being support. Once we got a reversal, kept retesting that buy zone area, the buyers kept coming in, then it finally broke above that point of control zone and rallied all the way to the top of the sell zone. But that's where it met the stiff selling pressure. And now that we've had that initial wave, this first one, now another one. Now this one's an interesting one because, well, it's gone all the way back to the 200-day moving average. You can see there. Really important, the 200-day. Below the 200 days where you start to get a bit wary that it could really go. You can see in the past, often there's lots of volatility around the 200-day moving average, but when it does go, you can get really big moves from that 200-day. And here, big rally. So the setup is there that if we see just a continued sell-off on this, so even though we're bouncing this last few days, and could definitely keep rallying, and I'll talk about that in a minute, but the selling pressure comes in and we break that 200-day, you're then saying, well, watch out, because it could actually accelerate. And also, of course, that midpoint, that point of control, that's around 41.50. That's sort of my target. I think we probably will see the S&P get there. But I'm also, just based on this whole structure through the point of control, is when it can actually accelerate down to that buy zone, just as we saw here. Once it broke out, not much resistance until it headed up into that sell zone area. So similar thing, breaking through that area, you can end up having targets all the way down there, which is a big fall, wouldn't it? 3,800, another 400 points, that'd be another 10%. But right now that it's hit that 200-day and has found a bit of buying pressure, you're saying, well, okay, this can actually squeeze from here. It can find support. And, you know, devil's advocate, let's say it does that. That's possible too. If it really does find support at the 200-day moving average, that could be it for this sell-off. You've got to be really prepared for anything. But now that we've had this serious selling pressure from this area, interest rates doing what they're doing, you know, I'm pretty comfortable to put a line in the sand for me that it needs to get back above the high of that move for me to change from a bearish point of view here. That's above 46.50. So above there, that's where my stoppage would be. If you've been getting short through this area, I've been warning. I've got my people adding to shorts on the way down, which we're in the money on now. So, you know, the line in the sand is there. Up through there, this whole thing looks different, especially if it, you know, finds support at the 200-day and takes off. Well, yeah, I will change. But just looking at the way this is moving, we've got this wave, another one, this wave here to the 200-day. Look, it could even go all the way back up to that area before having the final break through the major sort of support zone, I guess you'd call it, that 41.50 to 42.50 area. Underneath there, watch out. It could really get blasted. But while it holds there, you know, yeah, we can have short-term move to the upside, but can see stiff selling pressure and then turn back down again. So that's, you know, it's a complex thing to set up how markets behave when they are very complex things. You're just trying to create some sort of sense out of it, saying, here's my line in the sand where I change my tune. At the moment, I'm looking at it from the bearish point of view and then follow it along. As you know, these waves, you know, they keep having retracements, you know, into the sell zone, don't they? So if we just look up closely, you can see quite clearly that on this short-term wave on the daily, I'm looking at that wave structure there, and you can see it hit the sell zone exactly. So a similar thing, just looking at this next wave, if things do turn up from the 200-day, you know, where can it get back to? You know, it could just get lots of resistance around 4,400, but up around, if it did manage to rally that far, up around that 44.75 to 45.25, I'd be thinking, watch out up there, don't get sucked in, because that would really be, I think, a good spot to be actually getting short. So that's really, we've sort of gone to that next phase. I don't need to be making big calls every day. I've made my calls over the last period, and I think they've been borne out the way that the markets have moved. So for me, you know, there's periods where you make a big call. There's periods where you say that odds are coming closer to 50% on what the short-term moves will be. And that is why I'm just saying, look, let's just see how this plays out here. But it can just keep going. And if it does get through those areas, if we just see it turn back down the next few days, and it just heads through that area, yeah, I'm saying watch out, because it could actually have a really bad move. So that's really how I'm seeing it, turning pretty negative just for this next period. Even if there's short-term buying pressure, I'm probably a seller, and I really need to see it above 46.50, and I will completely change my tune quite happily. So hopefully that makes sense, and you can follow it along yourself, have a bit of a clearer picture, and yeah, markets could be in for pretty serious little patch. And just looking at the ASX quickly, just wanted to finish with that very long term on the ASX 200. This is the old high from 2007, very important level. That's where the crash in 2020 sort of started from, a little false break of that level. And really all of this price action we've seen for the last few years is sort of oscillating around that old high. And the point being, if it fails down through there, you're sort of saying, oh, is this a false break of that 07 high? And could it be in for a bigger sell-off than many people expect? And, I've been saying just recently to sort of watch out based on the correction that we've had just over the last year or two. We've had that big wave down. There's your sell zone there. We had months and months and months of not much going on other than oscillating between that sell zone and the point of control of that wave. So that's where I'm saying below here, if it does keep going and cracks these levels, it really should accelerate to the downside. And, maybe it finds support there, but, maybe it doesn't. If it breaks last year's low, below there is, really bad. Don't know whether things are going to get that bad. Depends on the rates, what goes on, growth, etc. But just showing you the dominoes of how it usually evolves, and that, watch out if we do see it have another few bad days in the short term. But it's just been, such a long period of holding. This is all year, basically, holding above this area, just constant buying pressure. So, prepared for that, short-term buying to come in yet again, shake out the shorts before finally going. But yeah, it's on tenterhooks, let's say. Another wave to the downside, and it could really break open and accelerate. All right, I think that's enough. We'll come back with more next week.